Hello traders, welcome to your daily market update for Monday the 29th of June. It is the end of the month and tomorrow we have a payment from Greece due to the IMF in the order of $1.6 billion, and that doesn't look like it's going to happen. Greece has already said they don't have the money to do that. We've seen capital controls put in across Greece, meaning that ATMs are only going to spit out 60 euros a day. And the banks are going to be closed until the 6th of July, until after and it could be longer than that depending on how the referendum goes. Now, the referendum has been decided by Greek officials to take to the people the IMF's latest proposal to see if they will accept it. Now, they're going to do that on the 5th of July, and they have a payment due tomorrow. And between now and tomorrow, it's going to be interesting to see how the market reacts and the comments. It's all going to be headline driven from the officials back and forth to see whether the euro continues to price in further risks after today's large gaps that you'll see on the charts in a minute if you haven't already turned on your charts. So between now and tomorrow, the markets will be on the back of those headlines. And then tomorrow, if Greece does not make the payment, which is very, very likely that they won't, I'm sure the euro is going to undergo some further selling, meaning that they will no longer receive ELA assistance. And they need that ELA assistance to keep the money in their ATMs and in their country because they are operating on borrowed money. There's even a comment going around that they don't even have enough money to put the referendum together. So it's going to be interesting to see how things roll out over the next few days is the critical point, and then following that, exactly whether Greece hold their firm stance as well as the Eurozone officials, and we'll see exactly how long this game of chicken lasts. And the longer it lasts, I'm sure the further the euro is going to feel the pain. So we do have some data on the charts here today, and as you can see, we do have a fair bit coming out, German CPI and things of that nature. You can pretty much ignore all of this data today. The market isn't going to be paying any attention to this data in the European session, as it is always going to be about it's always going to be about these headlines. It's a headline-driven market. There's no use really getting excited about that data. Following into the US session, though, it will be interesting to see how pending home sales does come in for the US. And, of course, the Canadian data is going to be of interest. So they're the two major pieces of data for us to follow. Other than that, let's move on because it's all going to be headline-driven. So I suggest you keep an eye on your Twitter feed, as that is the fastest way to get real-time data. A lot of us traders use that information. Now, this is the US dollar index on the daily chart. I just want to show you this. We do have a higher swing low and a lower swing high. We are moving into a triangle pattern, and a breakout of this triangle pattern is going to be subject to the market's interpretation of if the Fed will raise rates in September. Now, the Fed fund rate has been changing this morning. We have seen the likelihood of an interest rate rise move to 25% for September, and that has come about due to this Greek situation and the market really suggesting that the Fed won't look to raise rates while this mess with Greece continues. So that is the technical pattern, that is the fundamental story, and we'll have to wait and see if we do get the breakout. If I go to some shorter time frames, let's have a look at the 4 hourly. You can see that we did gap higher here on the open today, and we are coming back a little bit, more than likely just to close the gap and also to test this historical resistance level. That has also become support at some point, and then we may get a bounce off that. It's going to come down to really how the market interprets the latest situation with Greece and the interest rate rise expectations. So keep an eye on that, but we do have some resistance up here if we do get a bounce. Moving forward, let's have a look at the charts. The New Zealand dollar, once again, it's continuing to be under a little bit of pressure today, and we'll have to wait and see exactly how things roll out. We did get the gap lower. It has closed that gap, and now we are trading a little bit lower in the session, and that could continue to roll out throughout the remainder of this week. We don't have a lot of data this week, likewise for the Australian dollar, so we are still range bound for the moment, and it's going to be interesting to see whether we actually break through the bottom of this support level that I mentioned that we could be moving down into. We did gap lower, we have closed that gap, and then since falling away a little bit, and for now 75.5 cents is support, and a major breakdown of that more than likely isn't going to come until next Tuesday when we have the RBA minutes, but we'll have to wait and see. For now, the charts are taking its cues from the US dollar. The euro has gapped quite significantly lower, and we have gapped on the outside of this rising channel. Technically, we have pulled back up, tested that rising channel trend line, and then looks like it wants to fade away and continue lower. That's the technical outlook for the pair. However, we need to keep in mind that the market is headline driven, and at any moment we could get a bounce to close that gap should there be a deal or some progress. However, if the progress continues to stall and we continue to see Greece looking like a default, I'm sure that we will see this continue to slide and move lower and lower and lower, basically extending the breakout of this rising channel. So keep an eye out for that. And like I said, it's all headline driven. So you can use the technicals as your cue for entry and exits, but the markets are ultimately going to be moved by the rumour mill. The pound has also moved lower. We have gapped lower. We haven't closed that gap just yet. We have bounced off to the daily lows so far. However, we could see this continue to move lower as the effects on Greece drag out. They should roll over and affect the UK economy in the eyes of the market, and then as such, the pound should continue to be under a little bit of pressure for the time being as well. The US dollar versus the Canadian dollar is probably the most stable right now, as the US dollar has gapped up a little bit, and then oil's gapped down a little bit, with oil consumption expected to be reduced in this time of crisis throughout Europe, potentially. So the oil price is sliding on the back of that, the expected demand for oil, and the US dollar just bouncing up a little bit as the safe haven, really the place to hold your money right now in a volatile market. So it's probably the most stable right now, technically speaking. We have still got the restrictions of the downtrend. However, if the US dollar does bounce, we could get it to move back up through, break out of this downward channel and continue on the basis of the market still looking to price in an interest rate rise this September. And finally, the US dollar versus the Japanese yen came screaming down, tested the 122 level, so 122, close enough to, it touched it and then it's rejected off it and then bounced up. Right now we do have, it is in right in the smack bang in the middle of the close on Friday and the lows, so to speak. And it's going to be very interesting. 122 is a major support level. If we do get a breakdown below that, meaning that the market is dumping its idea of an interest rate rise in September, or the likelihood of, well, then we could continue to slide back down into the really low 119s. However, if this does hold up as major support, I've got this yellow box here, and you will have noted in previous videos, I do like this area as an opportunity to buy the US dollar, as overall it is the strongest economy right now, and it does, the fundamentals will come through, and we should see that reflected in the US dollar in the sessions ahead throughout the remainder of this year, I believe. And I do believe we will get an interest rate rise. So whether we get it in September, I'm still undecided as a result of this Greece situation. So we'll keep an eye on it over the next 4 weeks or so. Well, that's it from me today. Be careful out there. There is a lot of volatility, a lot of price action. Brokers, some of them have increased their margins for the euro pair. Some of them have restricted trading. So also respect your stop losses, as they will not be guaranteed in this high volatility market. It's best to use this opportunity to learn about the fundamentals, why the markets are moving, why gold, why equities, silver, oil, All the other currency pairs are all moving as a result of this crisis, as it can be a very good education for you, and you can take on board exactly how the markets react in certain circumstances. So I wish you all the best of luck in today's trade, and I'll be back again tomorrow. So until then, trade well.